You know, everybody in this industry wants to recruit, right?
Yep.
Now, here's a thought, Frank.
What?
Everyone right now, you're basically going after somebody else's retread.
Well, yeah. I mean,
When people move, it's from one of two reasons. One, the company, or two, it's you.
yeah, that's true.
And when you're recruiting, you don't know which one you're getting. How
Never
about this?
know.
How about if you get somebody who's actually new and excited about the industry?
Brand new guy.
Young,
new.
knows technology.
Doesn't know anything about it. You get to mold him and shape him and make him into a great producer.
Well, that's a great idea.
But you know what's tough is being able to get the time to train those new people. If only there was a solution.
If only there was.
If only there was.
I got an idea.
What?
New loan officer you.
Oh my God, I didn't think about that. You're right. It is that solution.
Right.
It trains him from scratch.
From scratch, soup to nuts, beginning to end.
It's not just to get them a license. No, it trains them how to be a loan officer.
Now you get a young person who's working with you, they're loyal to you, and they produce for years.
Wow.
Or a retread.
What a great idea. You know what you should do is click this banner you see over here. Now it's over on your right, but you may have to scroll down a little to see it. But it's over there, but maybe it's down. Click on that and get started on it.
And by the way, that young person would know to scroll down.
That's right.
Now on to Feedback Friday. 1, 2, 3, 4. Talk about what you say. Feedback Friday. Talk about what you say on Feedback Friday. On the show we did about rolling back Dodd-Frank and replacing it with a new Senate bill, Joe Johnson said, "Congratulations, mortgage thieves. Life just got good again. As if 2008 didn't ruin enough lives, you are bloodthirsty for more. What a disgusting industry." BOHICA, which I had to look up, stands for Bend Over Here It Comes Again.
Wow.
I had to look it up. Lie all you want. It's kind of what you all do anyway. But this gives a green light to a fraud fest of the highest order, and I can already hear thieves yelling and indignant. Spare the world your BS, please.
Nice.
Now, the fact that he knew what that bend over thing was tells me he's used this a couple of times. We might be dealing with an angry person.
But very, very awesome comment. Gotta admit, didn't like what we said, but whatever. Okay, Mark Renew, I guess is how you say that. He said this to the same show that we just commented on. To add a little clarification to this topic, the bill in question, Senate Bill 2155, modifies the requirements for smaller banking institutions to allow them to make loans to customers who may not fit neatly into the current QM box, just like Fannie Mae Freddie Mac loans that get approved over a 43 DTI. The caveat is they must hold 100% of the loan on their books in order to obtain this waiver. That means no selling off the risk. Well, there you go.
Hardly bloodthirsty. We did a show on loosening up compliance. Johnny Fowler of Hancock Mortgage Partners said, "Amen, great show. Compliance needs to either catch up or get out. Compliance personnel need to actually know what is going on today and relay that information to the auditors, regulators, or get out of the way. Compliance is valuable and needed, but not the sacred compliance person from years gone by." I just had a conversation regarding a compliance issue where the solution from the compliance department was the most obvious RESPA violation. They were walking away from compliance. It's
just
maddening.
walking away from it.
And it's not the first
I
conversation
mean, at the end of the day, compliance does need to loosen up a little bit here. They need to find ways that lenders can actually get some business without being so horrified of the consequences.
Compete.
Yeah. Okay, another comment here, and this is from one of our shows. Bernie Dillon says this, "Newsflash! There are more entities that regulate the mortgage banking industry than the CFPB. Take HUD and the FTC as examples. And there are many more at the federal level. You really should get off the kick that all we have to worry about is the CFPB. In addition, if you're a non-bank mortgage lender, and many of us are, then take the number of states you're licensed in and multiply that to get the minimum number of entities who regulate you at that level." That's true because you have all the state guys as well. A number of the state banking regulators have stated that they are going to increase their level of supervision, protect the consumers that the CFPB is no longer going to protect.
And he's absolutely right. We've done show time and time again saying we've got no less than 6 different agencies that are regulating mortgage companies right now. Why do we need a 7th with the CFPB? So I absolutely agree with you.
Right.
However, the CFPB alone has the ability to interpret and enforce RESPA. And that is something that needs to be looked at.
And with respect to the state regulating lenders as well, the different states regulating lenders as well, you got to have that. But what we're just looking for is that when it comes to compliance, just get the bad guys. Don't regulate the ridiculous stuff that the CFPB has seemed to be doing, right?
Correct.
Get the bad guys. That's what compliance should do.
That's right. Robert Brewer says, long story short, I think that these higher DTI files should be reviewable on a case-by-case basis. If the person shows the consistent ability to actually save money, that should carry more weight than disposable income. Totally agree.
Okay, Matt Pfeiffer says this. If DC's goal is to protect consumers from themselves, so to speak, and from getting in debt over their heads, it only makes sense to scale back DTI limits for lower income levels and either leave it alone or raise the DTI limits for higher income levels. Thanks for the great shows,
And
guys.
he's right there, but the problem is we're seeing it go the other way around, especially with some of these bond issues that allow low-income folks to go up to 50.
Right.
That makes no sense whatsoever.
Right.
It needs to be flipped exactly like you said. Regarding the Senate bill to roll back Dodd-Frank, and by the way, there are a lot of comments on this, Joe Bistricki said, does Senate Bill 2155 change the appraisal process? Is it just me, or are there a lot of lazy, sloppy appraisers calling themselves professionals? Appraisers seem to have very little incentive to provide quality reports the first time, quickly turn revisions, and earn a living. AMCs are receiving too large of money. In theory, AMCs should work. However, reality slows the process, weakens the quality, and can make a bank, underwriter, realtor, and loan officer look like idiots. Any changes proposed in SB 2155? The answer is no.
Okay, and Ed Hoffman, one of our viewers, said this, and this is directed at you, my friend.
Correct.
And he said, Brian, all caps, if your father-in-law is 85 years old, 25% down would not have gotten him a heckin' purchase. Aha. I just did one for a 91-year-old, and her out-of-pocket was about 36%, and I charged no origination fee. Perhaps Frank, your father-in-law, was short to come in with the additional down. I'm not sure why he said that, but anyway, I'm sure you know that it was the case, but it should be pointed out that it wasn't a straight trade. Payments or no payments required, pick one.
And I didn't give everybody the full details. He did have the money to come down with a Heckham purchase. What I wanted to point out is that his reserve funds that he has now after his normal purchase is going to be depleted based on what his bill sets are right now in about 5 years. That would have been avoided by putting more money down with a Heckham purchase.
Got it, that makes sense. So he had plenty of cash to do the low LTV to get the Heckham, but he decided to keep some cash and just put 25% down.
Right, he's on a fixed
Right.
income. Without that house payment, he would be able to pay and sock a couple dollars away.
That makes sense. That makes total sense. Okay, so let's get to what we picked as our best comment, who wins one of the great prizes that we've been showing off all week.
All right?
And I'm gonna call it,
Call it.
Brian. Joe Bistricki! Congratulations, man! So, Joe, if you reach out to us, maybe on our Facebook fan page or however you'd like to, off the website or whatever that
We'll
might be.
get you a goodie.
We'll give you one of those prizes, man. You can kind of pick which one you like, and if we feel okay with letting it go, we will.
He's gonna go, do you got anything that vibrates?
Anyway, you guys have a great day. Do us a favor, leave us your comments down below, forward, share, and subscribe. We'll catch you later here at the National Real Estate Post. And don't forget about growing your branch by hiring new people.
Right.
Brand new people and training them. New loan officer you.
Bye.
Catch you guys later. Bye.